Researchers in Minneapolis Fed say the pandemic is forcing mothers of young children out of the workforce. Some 3 million women have been forced out of the paid labor market in the past year. Everyday families face impossible choices between their paychecks and caring for their children. The Biden Rescue Plan, as you know, provides the funding we need to get Americans vaccinated, as you suggest is the right policy. And that will help kids go back to school, to help working moms back to work, get back to work safely. What can the Fed do to make sure women, especially those with young children, can return to the workforce so that we don't end up with an even bigger lasting gender gap in the labor market?
So the tools that can really address specific groups, for example, women who've perhaps temporarily dropped out of the labor force, those are really fiscal policy tools. Obviously, those are not tools that we have. And I today will stay away from fiscal policy and really talk about what we can do. And I think the main thing that we can do is continue to support the economy, give it the support that it needs. We're still 10 million jobs below the level of payroll jobs before the crisis. There's still a long way to go to full recovery, and we intend to keep our policy supportive of that recovery.
Thank you for acknowledging in your opening statement and your comments to many of us and your public comments, frankly, about how much we need to do to fight racism and increase diversity. Yet we know historically the Fed's monetary policy has benefited wealthy savers and homeowners. Decades of discrimination in the financial system we talked about earlier, from redlining to the subprime mortgage crisis, specifically targeted Black, Brown, and other vulnerable communities. It's clear the Fed's policy and failure to regulate predatory actions in the banking sector have contributed to the racial wealth, income, and home ownership gaps. You've said that the Fed's tools can't address the underlying causes of racial injustice or income and wealth inequality in our economy. I think you give up a little too easily when you say that. So how can the Fed use its supervision authority to enforce anti-discrimination laws and fight racial injustice and income inequality?
We do have responsibilities and authorities for fair lending, for example, under a number of statutes, and we take those responsibilities very seriously, and I think carry them out robustly, and that is an important part of our mandate. And so that is something that we can do, and I think we do aggressively. In addition, through our Community and Consumer Affairs Division and through the Federal Reserve banks, we don't spend public resources, but we try to attract private resources around, for example, initiatives that will address issues of economic issues of low and moderate income communities and racial minorities.
I think we can do more, but we will discuss that later. Chair Powell, in the middle of the pandemic, bank regulators have loosened capital requirements at the biggest banks. And one of its changes to the capital rules, the Fed stated the rule was meant, and I quote, to allow banking organizations to expand their balance sheets as appropriate to continue to serve as financial intermediaries, rather than to allow banking organizations to increase capital distributions, unquote. In other words, the Fed reduced capital standards so banks would lend more, not so they would pay dividends. But it's, as you know, it's not what's happening. The biggest banks have gotten larger, they've gotten more profitable, but they haven't increased lending. Dividends, however, have remained steady. My question is, Mr. Chair, will you promise to the committee that you will not extend any exemptions for capital requirements for banks and bank holding companies that have continued to pay dividends rather than invest in the real economy?
So we're talking here really about the temporary measures we took with respect to the supplemental leverage ratio, and those expire at the end of March. We have not decided what to do there yet, and we're actually looking into that right now. I'm not going to commit to connecting that decision to the payment of dividends as a separate matter. As you know, we intervened to require the banks to limit their dividend growth to zero, and also to limit their share buybacks. And the result, what you see now, is a banking system that has higher capital than it did going into the pandemic, and particularly for the largest banks, and one where the banks have taken very large reserves against losses, and so have proven themselves pretty resilient.
Perhaps, but I also we also understand that they have not been supporting the real economy to the degree that we hope they would, and we will continue that conversation. And I will send a written question to you on climate that we wanted to talk about.
Shepard Smith here. Thanks for watching CNBC on YouTube.